Africa has been the first frontier for the global ambitions of India Inc. From the Tatas to the Mittals to the Jindals to the Bajaj. Indian business conglomerates have long been either sourcing minerals from Africa or exporting finished goods to many countries in that continent. Since 2000, exports to Africa have jumped 4 times, while imports from Africa have gone up 7 times. To widen and deepen these trade relations and make India a partner in Africa's development, the African Development Bank recently held its annual general meeting in Gandhinagar in Gujarat. Indian policymakers, including Exim Bank Managing Director David Rasquinha, Economic Affairs Secretary Shaktikanta Das, Mines Secretary Arun Kumar, and African Development Bank's Vice President Pierre Guislain, chatted with CNBC TV18 on the challenges that Indian industry encounters in Africa.
By any standards, the relationship between India and Africa should be the closest and the warmest. Geographically speaking, India is perhaps 1/4 the distance to Africa compared to any of its trading partners. Say China, we would be 4 times closer than China is geographically, or for that matter the United States, or for that matter Europe if you reached by sea. So geographically, we should be the most important trading partners. And historically, there is a large Indian community in practically every large African nation. And this relationship dates back to millennia, maybe 2 millennia, perhaps. So historically or geographically, we should be the best of friends, India and Africa. And some of the numbers are justifying that friendship. Indian exports to Africa have increased 4 times in the last 20 years. And Indian imports have increased 7 times in the last 20 years. But I'm from the media, and my public relations speech ends here. The honest truth is that India's share in global trade is itself around 2%, and Africa's share in Indian trade is a decimal figure which goes into 0.0 something. So, since we are friends here, we won't mention these kinds of numbers. We will look at the future and look at it with hope. Mr. Arun Kumar, I want to start with you. One of the most attractive relationships that we can forge is in the space of iron ore, or in the space of mining. Yet this 2 big fears. One, that there isn't enough money. That comes by way of credit, and I will come to Mr. Rasquinha on that. But the more important is that we don't have an investment protection agreement. So there is always that country risk, that government risk. So what is the Indian government doing about it?
Well, like a true bureaucrat, I will pass that question off to my senior colleague, who's the Secretary of the DEA. And it is his concern and the concern of MEA that BIPA agreements are done with. But having said that, to address the question that even without BIPA, why does business not happen to the extent which we hope for and look forward for? There are issues of geological knowledge within the continent of Africa. There are issues, as Latha said, of policy inconsistencies. And there are issues of a lack of full support from, again, I'll pass the buck to my colleague David. Having said that, there is also an issue that mining in many places has got a bad name. Let us not quibble about it. It's treated as a windfall for some. So if you have a well-regulated system, if you have a system which shares prosperity with the community, which creates value in the community, we will have much more fruitful engagements going forward.
Okay, well, let me invite you to say pleasant things. What do you have on your plate in terms of increasing Indian engagement, mining companies, since that's your area of interest, with their African counterparts? Is there a game plan? What would you like to see happen?
Well, what I would like to see happen is we would be bringing forth how our regime has changed to auctions. Now, Latha, being a business correspondent, may not like auctions per se because they take away the pot of gold at the end of the day, but they also make it a more transparent system. So we would be willing to advise and help our colleagues. We would be willing to extend trainings, and we would be looking for, as far as the PSU or the parastatal sector is concerned, for a G2G business opportunity with governments, because many governments have their own parastatals heavily into mining, and if we can strike that, so the parastatal stream would flow, and of course, the private sector would be more forthcoming to go in there if we have more transparency going forward.
Let me get Mr. Guislain in on this issue. Mr. Guislain, you know, African Development Bank can lend a huge helping hand to the India-Africa trade and to both the enterprise economy in both these countries by providing some much-needed infrastructure. The companies I spoke with, the biggies at Tata Steel and at JSW Steel, usually say that while the ores are extremely attractive and mining in Africa would be cheap, cost per ton would be cheap, by the time it gets to the coast, it perhaps becomes more attractive to buy it off the shelf from one of the, from any other cargo. So what's the AfDB's plan to improve infrastructure to the end of connecting the last mile?
No, thanks, Latha, for this question. And so clearly, as you said in your own introduction, there's a lot of potential for India-African relationships to deepen. And I think there's first also for us at the African Development Bank an opportunity to support that relationship. Because maybe the first comment I'd like to make is that the numbers you mentioned indicate the relationship is not very deep and the familiarity is not always very deep. And so we have actors like India Exim that are quite present and quite engaged in the field, but we also can help. We can help by being advisors to governments, which we are. By and large, the African Development Bank does 75% of its business lending to government, advising governments, and the other 25% is to lend to private enterprises. So we would quite welcome having Indian companies come to us and say, look, we need some help. We need some help because we'd like to invest there, but it's a new environment for us. We're not very familiar with it, and we'd be more comfortable if you came along. Now let me get back more directly to your question. So one of our high fives, and several of you have mentioned them, I won't enumerate them all. I know them, but I won't list them all. But one of them is Integrate Africa, and it's absolutely important to do that. Why? Africa is 54 countries. 16 of these countries are landlocked. So that means that for them to trade, whether it's with India or any other part of the world, just with their neighbors, you need good connectivity. You need ports, you need roads, you need rail, etc. So two things. One, you have large Indian companies, and in telecoms, you happen to have one, Bharti Telecom, which is very active, a big investor in Africa. I think they're in about 17 different African countries, which shows that Indian business has opportunities to develop there. But so, by and large, our role at the African Development Bank is to support that infrastructure, whether it is by lending to the public sector or by lending to the private sector. So we are there to help governments and private sector put in this critical infrastructure in place, critical infrastructure without which Africa cannot grow, cannot export, cannot import.
Well, I'll present another request to you, which comes actually from Indian industry. The large part of India's trade with Africa is in areas where a great deal of lines of credit is not needed, where you need small lines of credit. You know, textile, gems and jewelry, spices, largely small items. Do you have a game plan to develop non-bank retail finance or bank retail finance? That's a crying need, which practically every industrialist I spoke with was asking for in Africa. Do you have a game plan?
So not only do we have a game plan, it happens to be one of our biggest sectors of involvement. We're extreme, especially on the private sector side, because that's what we're discussing here, is our biggest exposure in lending volumes on the private sector side. Over 50% of our lending is to commercial banks, and it's by and large for two main activities. One, lines of credits that go primarily to SMEs. That's one big part of the business, and the other one is trade finance. finance. So to finance trade finance deals both through guarantee schemes and through letters of credit financing. So these are two major parts of our investment. We do fully acknowledge that this access to finance is absolutely essential, and we do that through intermediaries. We will lend directly, primarily to banks, very rarely directly to companies.
But retail, is it refinancing retail credit?
It is financing all types of credit, but mostly not so much on the consumer side, mostly on the SME side and on the company side. So that's the main lines of credit that we have. But we also provide, as I mentioned, this trade financing and direct lending, but then to larger endeavors.
But when it comes to retail finance, I would tell you a dipstick survey across India would tell you that you could sell a motor scooter only if people are paying cash down the entire amount, not with retail credit. I mean, the amount, the bandwidth of people who want a two-wheeler to be able to find bank finance is relatively less than obviously the seller would like it to be. So that was one request which Indian industry asked me to present to you.